Okay, MegaWhale team, welcome back to the channel and thank you for tuning in. I hope you're all having an absolutely fantastic start to your day. In today's video, we are taking a look at Bitcoin's chart on the macro and the short term, discussing the recent weekly candle close, going over the levels of significance you should be paying attention to, discussing, of course, the total cryptocurrency market cap and even the short-term price action. Before we get into it, smash the like button, hit the comment button, and subscribe to the channel. We post daily videos of Bitcoin focusing on the facts, the data, the technical, and the structural information. If this is the kind of content you are interested in, you can also join us on Telegram. We focus on nothing but the facts. No hype, no BS, no emotion, simply pure raw TA. You can join us on Telegram with the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop with cryptocurrency with Bitcoin and the relevant economic news. And if you were interested in taking your trading to the next level, check out the VIP channel. You can do that by clicking the pinned comment, find out more information by contacting our admin, clicking the 50+ month trading track record link, or watching a 10-minute video inside the channel itself. Check it all out. We'll see you in there. Let's dive into the content. Taking a look at the higher time frame charts, of course, Bitcoin has just had its weekly candle close. Now, all in all, the prior week of price action was very volatile, very choppy, and mostly indecisive. We didn't see that much movement on the weekly in terms of our weekly close. We did see, however, a nice strong bounce from that 50 EMA on the weekly, being that $76,000 region. Now, with this bounce from the 50 EMA, we are also able to sustain above the very important level on the RSI we discussed in yesterday's video, that being the 44.64 level. We have also seen on the total market cap a weekly close above the 50 EMA again, as well as the weekly being able to sustain not only above this major uptrend, but of course the respective horizontal trend line on the total market cap as well. So this week hasn't necessarily been a fantastically bullish week, but we have seen a week where this selling pressure, this bearish strength, has kind of faded away a little. We've seen some exhaustion from the sellers this week, moving into some critical areas of support, particularly moving into our major economic news in just under 3 days, which will likely be the trigger and the main driver for the next move of Bitcoin and the cryptocurrency market. Moving over to the total market cap, we can see, guys, some major levels have still been held. However, a loss of these major levels in conjunction with Bitcoin losing these critical levels we're going to be discussing could spell disaster for the markets, and something we'll be discussing in today's video, contextualizing with our FOMC data. Let's start on our market data. 24-hour volume and liquidations are still quite low, but we are starting to see a little bit of an uptick moving into the new week, coming out of the weekend, with liquidations pushing up to 253 million here, 176 million in longs, 74 million in shorts, so volume pushing up to 140 billion, up 54% net. Looking at the DXY, it has opened up slightly green, sitting above the midline still, awaiting the FOMC reliefs for its next directional move. Currently, this is going to be a short-term level of support. Again, a loss of this region, and we shall expect a continuation all the way back down towards these lows. Until then, an area of which short-term reversals could develop depending on how that interest rate data comes out, and more specifically, the narrative set in the interest rate meeting is going to massively dictate where we see the DXY move towards. The same goes to the S&P 500. We actually saw a bearish close here in the S&P 500. It is still looking very, very bad over here, now sitting underneath that 50 EMA on the weekly and sitting underneath that 5,700 level on the weekly. We need to see a bullish result in FOMC, and I do not mean the actual result. We know that the probabilities are massively in favor of an interest rate pause, but the Federal Reserve press conference after, if we get any sort of narrative that is bullish, i.e. we see interest rates potentially cutting sooner than expected, we see, i.e. maybe more interest rate reductions than previously anticipated, we will likely see the S&P 500 and Bitcoin see some relief. However, if we get no indication of either of those and we get an interest rate pause and the Federal Reserve stay on the fence discussing they are looking for more data, they're waiting for more information, it is likely the markets will continue in the direction they have been, which is downward. So a lot really rests on this upcoming meeting to determine where these markets are going to go on the higher time frames. We can't predict where they're going to go, but what we can do is we can identify trigger points on the charts, and we can use those trigger points to paint a picture of what would happen if the price action breaks below or above these levels, and thus develop a plan of action. So taking a look at Bitcoin, we're going to be going over the macro, discussing the significant levels on both the RSI, on both some technical indicators on the weekly, and of course the short term. We'll also be relating that back to the total market cap, and we'll also finish up on the short-term price action. So before we get into it, guys, if you're looking to support the channel even further and support yourself in your trading, sign up to BitGet, BitUnix, or BingX. These are the exchange links down below. You'll get a lifetime trading fee discount of 15% off all your trading fees. You'll support me making the content, and you'll support yourself. And additionally, you'll also automatically enter our giveaway, which will be announced at the beginning of next month, and run it in the giveaway to win up to $3,000. And even a bonus lifetime trading fee discount of 25% based on your trading volume. Check it out. We'll see you in a second after playing a quick ad, and we'll jump back into the content. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay, legends, let's get straight back into it now. There are some major levels we need to discuss on both cryptocurrency, the total market cap, and of course the Bitcoin higher time frame charts. So let's waste no time and jump right into it. There are two levels we are watching that share massive similarities. This is going to be the 50 EMA on the weekly, and of course the 44.64 level on the RSI. What we have noticed over here on both the RSI and of course on the 50 EMA on the weekly is, while we have been above the 44.64 on the RSI, we have remained above the 50 EMA the entire time. So the entire 2-year period, essentially since September 2023 up until now, so about a year and 6 months, we have remained well and truly above that 50 EMA on the weekly and the 44.64. So we can identify the 44.64 being a trigger point for confirmation for the price action to break below the 50 EMA. Now we know that when we have a loss of that 50 EMA, we are going to see a significant shift toward the downside, and we'll most likely see a continuation into that $60,000, potentially even $50,000 region. That is going to be a bearish target if we lose the 50 EMA. Now, for us to lose the 50 EMA, we're going to need to see a weekly close below that 44.64 on the RSI. So this is going to be a major warning sign we are watching moving forward, and it is unlikely we see this move down unless we see a bearish FOMC result. Remember, as we've said already, the main driver of the price action right now is going to be that FOMC decision, and more specifically, it is going to be the actual narrative pushed by the Federal Reserve during that FOMC meeting. It's going to play a massive role in dictating where we see the market travel towards. So taking a look at the broader charts here on the Gaussian channel, we can also see in the weekly chart that we actually have the weekly upper band of the Gaussian channel running below that 50 EMA very slightly. So we know that a loss of the 50 EMA and a loss of the 44.64 on the RSI would likely result in a correction into the upper band of the Gaussian channel. Now, historically, what we have noticed is every time we drop into the upper band of the Gaussian channel, we actually more or less see a direct continuation through the channel. And that would provide justification for a potential move towards that 200 moving average. So we can see here how the dominoes are lining up for a potential steeper correction for the market. Will we see this move occur? It is only if we see a very bearish result in FOMC that we will likely see this move occur. Until then, what we can see on the charts is we've got a very clear invalidation for the bull case, meaning we are at a level of major support. We have got invalidations just below the 44.64 and justification for reversals in the price action. Now, how aggressive these reversals will be will highly depend again on FOMC and the short-term price action developments, which we'll discuss in a second. But more or less what we're doing here is we're looking at the higher time frame chart and we're mapping out invalidation points in which could trigger continuations in the current trend. So relating this back to the cryptocurrency market, what we can see here in the cryptocurrency market, this is the total market cap, is we do share some massive similarities with the Bitcoin chart over here, and that is expected, Bitcoin being around 60% of the market dominance. We can see a respective level on the RSI, that being 42.60. The horizontal low we have basically been above ever since we broke out of that bearish structure at the bullish structure at the bottom of the last bear market. We have seen a direct continuation up ever since. This is on a log chart as well. And we can see that the 42.60 is going to be acting as a trigger point for a loss of the 50 EMA on the weekly. So we know that on the total market cap, if we were to drop below this uptrend and lose the 42.60, we would likely enter a steeper downtrend, as since we broke above this 42.60 on the RSI, we have been in a overall uptrend. We break below it, we likely enter a overall downtrend. So we do run the risk of those steeper corrections moving into this week, depending on what the data actually does come out as, and we can relate that back to that Bitcoin chart we just discussed. So that is the macro charts, guys. There's not much more to say in the weekly, but let's break it down now to a 3-day chart. So over the last week, we have seen the weekly close occur, of course, and that did result in a bounce on the 50 EMA. Now, although this bounce was good, we've seen a nice move toward the upside, and as we discussed in yesterday's video, it was a pretty solid bounce. It really is not yet enough to confirm the fact that the buyers are in control of the price action. It is not enough to confirm the price action is going to continue higher. It is just a short-term mean reversion after a very large correction. For us to be confident the price action is going to continue higher, we need to see a few things. Number one, we are watching the downtrend on the RSI on both the 3-day chart here. As you can see, we have this downtrend on the RSI as well as the downtrend on the price action, but we are also watching the mid-level of the Gaussian channel. The reason we're saying the mid-level is because the mid-level generally acts as a point of support and a point of resistance once we are in the channel. So this is acting as a current level of resistance, which is sitting around that $86,000 region, which lines up with this prior high over here on the short term, which if again is retested may act as a rejection point. But if we are able to break through this region, it is likely that 3-day RSI will break upwards and we will see a continuation. So although we have had a bounce, it is not yet enough to confirm we are going to see these continuations. Let's move down to a short-term chart now, starting on the daily. As we mentioned, the two levels we are really watching on the daily is going to still be this daily downtrend in the RSI and the daily downtrend for the price action. These are 2 points that absolutely need to break toward the upside for Bitcoin to still be bullish. Until we see a break of the overall downtrend, the overall expectation is that we move in this downward general trajectory. At the moment, it has been incredibly choppy, but the overall trajectory is still downwards. And of course, while we are underneath the RSI, the overall net momentum of this downtrend is still negative. So at the moment, we are watching for a breakout on the RSI. If we see a break on the RSI, it would indicate that the momentum that we have been experiencing through this downtrend has moved from negative to positive. That will be a discrepancy between the direction of the trend and the suggestion by the overall strength, which could result in a reversal in the price action. Until then, the expectations are going to be lower. especially if we see that meeting come out bad. That could result in these stronger moves toward the downside. So the short term is still looking relatively weak. On the daily, there is still not enough to confirm these macro swings toward the upside. Let's now move over to the shorter time frame price action. Now, what a weekend it has been for Bitcoin. Now, we discussed in yesterday's video that last weekend we saw a very similar pattern. This strong and aggressive consolidation sideways, followed by a very volatile reaction early in the week. We are seeing the same kind of thing, this strong and aggressive consolidation sideways, followed by a volatile reaction early in the week. Again, these moves are absolutely insane. In fact, if we look at the last week of price action, the amount of flash moves we have had on Bitcoin, just these large single candle moves, have been absolutely insane stuff. It really goes to show how much indecision and how much pent-up, how much pent-up liquidity we are developing around these levels moving into that FOMC meeting. So I'm expecting this volatility and sporadicness to continue. As we can still see, the price action is not moving in any clear fashionable structure. We are respecting some very short-term levels that are more or less being developed as the price action moves along. This is very, very choppy territories and very tricky territories to trade, just because of how little this historical data really means for the current price action. So I would avoid being too aggressive in these conditions, of course. I'd definitely be waiting for FOMC to clear. The hopes is when FOMC does pass, we see more clarity in the short-term direction. Again, this isn't a problem with the higher time frame direction. The higher time frame direction is very clear. Our invalidations on the higher time frame, the weekly and the 3-day, are very clear. But when we're looking at this short-term price action, it is incredibly choppy here. So at the moment of the short term, again, all we are doing are mapping out these prior highs. We are looking at these prior lower highs, particularly we have a high up over here. We have got, let's just use a pen. So a high up over here. We've got our lower highs, We are watching specifically a $90,000 region to break. If we break 90,000, there's a good chance we reverse. Until then, we are expecting that overall downward trajectory to continue. Let's finish up on the total market cap. So as we said already, the total market cap is showing a lot of similarities with the Bitcoin chart. And as we mentioned, with Bitcoin being that main driver of the market here, holding around 60% of market dominance, Bitcoin is really going to be the one that determines whether or not we see this total market cap breakdown. Now, if we do see the total market cap breakdown, it is likely we will also see that spill over into the altcoin market. The altcoin market is looking a little bit better over here, I would dare say, than Bitcoin, simply because we have seen a lot more of an aggressive correction moving into this recent correction we've seen for Bitcoin. It's held a little bit better at that 50 EMA, and we haven't quite seen that horizontal on the RSI being retested. But that being said, if we do see that total market cap breakdown, it is very likely the total market cap for altcoins could see another 20 or 30% pullback into this $650 billion level, which would result in that RSI potentially breaking or even retesting that 42 point. So we're going to wrap the video up there, guys. Stay very patient, be very cautious. We have a big week coming up. I'm expecting a whole bunch of volatility. We've identified some major trigger points on both the weekly, on the 3-day, on the daily, and the short term we need to pay attention to. Overall, these conditions are not fantastic. We have to wait a little bit to see how the market develops moving into and out of FOMC. But thank you for tuning in. Have a great day for the rest of the day, and we'll catch you in tomorrow's video. We'll see you then. Bye.